And good morning, everyone. How are we doing today? It is April 10th, 2025, and our live trading event is long overdue. It's been a while. I don't even know when we had the last live trading workshop. I think it was back in March, beginning of March, perhaps. In any case, long overdue. All right, so today is live trading workshop time. And before we get into it, a couple of words from my and here's I'm greeting you once again from beautiful Brazil today. Again, living the life of a trader, which of course allows you to trade from everywhere. The beauty of the internet makes this possible. So that's awesome. And I'm going to ask you right now, where are you guys calling in from? Who do we have in the room today? Please share your location so we can get familiar with one another. And the second thing I wanted to say is these live trading workshops are always, one of the highlights I'm going through every month because it allows me to fully focus on trading with no distraction. I mean, a bit of distraction as I have to talk and discuss the chart, but typically in my life, at least, there's so many things going on. There's webinars, there's discussions with partners, customer service, talking to clients, and all these things, which barely allows me to fully focus on trading. So these 2 hours, which we have ahead of us, is something I've been looking forward to do. Having this said, the market conditions, as you know, are not the easiest right now. They are largely news driven, and which makes them unpredictable to some degree. So our technical analysis is definitely going to help to find some interesting trades, but whether they're going to pan out as the technicals say, this remains to be seen as any news event that comes in. And typically, as you know, we're trying to steer away from news events, but this day is going to be fully packed. So it's going to be hard to navigate this, which makes it a bit unpredictable. So please keep this in mind. Having this said, we do have an almost perfect record to defend today. I think our last 3 or perhaps even 4 live trading sessions have been extremely successful. And of course, we're going to try to do the same thing today to see if we can find some interesting setups. Yeah, throughout the day. And of course, we're going to be day trading. So we're going to try to open and close trades at the same time. Lots of exciting stuff. Okay, so let me see. Who do we have in the room? Please share your location. Who do we have? We have Dean from Phoenix. Good to see you, Dean. And by the way, Dean, we've been, and Homer and I've been to Phoenix many, many times because we had some business down there. So it's a beautiful, big, big city. Gerd from Germany. Hey, Gerd. How are you, Gates? Scott from Guelph, Ontario. Ah, yes, Scott. Excellent. Can we look at NVIDIA? Maybe. We'll have to see. It's going to be mainly a futures day today, Scott. David from Frankfurt. Hey, David. Good to see you. David has been very active in our Discord channel, so it's awesome to have you here, David. And Ron from Utah. Hey, Ron. How's it going? Are you anywhere near Salt Lake City? And if you are, are you in contact with the Metastock folks? We have very good relations with them, which are, I believe, based out of Salt Lake. Wayne from Boston. Hey, Wayne, how's it going over there? Chris, Northern California. Hey, Chris. Faith from Palm Springs, California as well. And Keith, Washington. Is that Washington, D.C. or Washington State? Keith, maybe just clarify real quick. And Ron, in 3 hours from SLC. What is SLC? Maybe I'm not so familiar with these abbreviations. Perhaps clarify. And Keith said it's Washington State, so it's the West Coast. Awesome. All right, guys. Salt Lake City. Of course. SLC. I just talked about this. But if you're not from Utah, maybe these abbreviations are not so obvious at first glance, at least. Okay, 3 hours away. Perfect. Okay, excellent, guys. So thank you so much for sharing your location. And let's get started. And I hope you can all see my screen right now. And before we actually start the trading, I do need to remind you that trading does contain substantial risk, especially in these volatile market conditions. So make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance and hypothetical performance and anything really based on historical data, keep in mind that this is not necessarily indicative of future performance, and any trades and setups discussed in this webinar should not be construed as trade advice. These are for informational purposes only. All right. So with this, a quick introduction of our team. Of course, we are tradingindicators.com. My name is Daniel Sinnick. I'm the guy here on the left-hand side. And back in the day, about 10 years ago, Homer here in the middle, my partner in crime. We have created trading indicators about 10 years ago in our beautiful office in Montreal, which is where we headquartered. Around halfway through, Nicholas has joined our team and he's become an indispensable member of our team. And of course, Nicholas will be here today as well, looking at opening or doing the demo of the charts and also executing the trades. Of course, if you are in our Discord channel, you know Nicholas. He's been very active. He's been posting charts left and right on our Discord. And yeah, so it's going to be super interesting to see what he has in store for us today. A couple of ground rules, of course. First of all, what we are trying to do is mainly take advantage of technical analysis. So we're not in the position to interpret fundamental news. This is not what we're striving for. We are looking at technical levels on your chart, which may influence price movement in the future. That's what we are trying to do today. This works best, and I have to repeat it one more time, if the markets are somewhat calm and not news driven. Of course, right now, this week, it's the complete opposite. Everything is news driven, which makes it to some degree more unpredictable and more difficult. But we're going to try anyways today. If this was not scheduled, perhaps I would have said, hey, let's try to wait a little bit longer until market or news have calmed down a little bit. But we're going to try, as I said, anyways today. Okay, so with this, this workshop is for you guys. So if you have any questions, please don't hold back. Ask your questions and put them into the Q&A box, and Nicholas and I and Homer, we will be looking out for those questions to make sure they all get answered. Okay, so with this, a couple of ground rules. We're going to be focusing on day trading today, mainly day trading futures. But rest assured that the technical analysis that we will be using today, this applies as well for other time frames. It applies for swing trading. It applies for trading stocks or currencies or cryptos and so forth. Yeah, so this is just going to be our focus has to be day trading today because we strive to open trades and close trades within this session. Okay, so that's ground rule number one. Ground rule number two is we will be using TradingView as our trading platform today. And the main reason for this is it's simply the greatest common denominator. Even if that's not your platform of choice, chances are you have seen or even used TradingView in the past before because it's just such a common platform and such a popular platform. Everybody has probably seen it before. So we're going to be using this platform, but rest assured, anything we're going to show today will work almost the same way on any other platform like Thinkorswim or NinjaTrader or Modifwave or whatever platform that may be. Also, will be taking live trades today using our live money account. Now, trading oftentimes is a game of patience. Well, this is a 2-hour session. Patience may not be on our side today because we have to take some trades. We want to take trades today. So because of this, we may force some trades, even if not everything lines up. But of course, we're going to do our best to go through our checklist to share with you what we find important before making a trading decision. But just keep this in mind that we may have to force some trades today, even if not everything works out perfectly, because we don't have the time on our hands today to wait for the perfect setup. Also, we may need to close out trades prematurely just to be sure to close them out within the session as well. All right. Now, are we going to have only winning trades today? Well, hopefully. But of course, there is no guarantee for this. We've been quite successful in our past live trading sessions, and I'm hopeful we're going to have a good session today as well. But of course, there is no guarantee. However, we will do everything in our power to increase our odds of having successful trades. So we're going to be using multi-time frame analysis. We're going to look at different time frames to see where the levels are lining up the best. We're going to make sure to not double dip, meaning that we're not going to take too long trades with very correlated symbols. So that's not a good idea. We want to diversify. We will take into account key volume levels and key support and resistance levels. We're going to see what is the overall trend is doing. We're going to try to steer away as much as possible from major market events. So we're going to look at the market calendar to start things off today. But of course, it's such a political day today, once again, with all the tariff talk going on. Tweets are being fired off. It is hard to completely steer away, but we'll do our best. All right, and of course, we will use conservative risk management. We're going to trade small. One thing that I recommend to everyone out here, this has made a huge difference in our trading to trade small. Why? Because using a smaller position size, first off, this means you will risk less, and risking less means that even if things go against you, you will not panic because there's only little risk on the table, risk which is certainly going to be within our risk tolerance. And even if things go against us, we will not panic. We still will make rational trading decisions. It is those moments of panic where you're above your risk tolerance, where oftentimes you make bad decisions. So we're going to trade small today to make sure, hey, everything, even if we lose every single trade today, we will still be well within our risk tolerance. All right, so with this, let's see which major market events, besides all the political stuff, are going on today. So I'm going to open up my trading view real quick if I can find it. Let me just drag this over. 1 second. I'll drag in my trading view. And this probably will disconnect Nicholas now, but he can just reconnect as well. So I'm going to go to my charts up here, super charts. And then once you're on your charting panel here, 1 second, while this is opening up. All right, I'm going to go to the calendar icon just here on the right-hand side. I'm going to click on it. And let's see what is going on today. So today it's April the 10th. Okay, core. So these are the high impact events. And luckily, as far as these major market events are concerned, these all have transpired already. So they all took place at 8:30 a.m. Eastern time this morning. So thank God, these all are behind us. So we don't have to worry about this. But of course, it's once again a very political day. So any tweet, any political outcome may shake the markets in an unpredictable way. So just keep this in mind. Okay, perfect. So that's the good, at least from this point of view. No major market events are coming out. It's going to quickly check what are the smaller events which are coming out today. Just go to Thursday. Here's the anything of significance. Logan at the Fed will speak at 9:30. Then 10:30, it's natural gas news, okay, which we may consider if we actually going to be in a natural gas trade today. 11 o'clock, the monetary policy meeting minutes minutes are coming out, and some other stuff at 11:30. All right, perfect. With this, let me go back to my slides one more time, because the last thing I'm going to say before we get to the live chart is we will be primarily using two indicators today. Indicator number one is going to be our volume IQ indicator, which shows us directly on the price chart where is the most volume being traded, where is the zone of control, where are our action zones, what is the bias in a particular price area, is it bearish or bullish? We're going to use, of course, this information. Secondly, we will be using Liquidity IQ, our AI charting assistant, to show us where are key support and resistance levels on the chart. And ideally, these will line up, at least to some degree, with what we see with volume IQ. So we're going to use all this information to make trading decisions. All right. And one last thing, we may also add MA rush to our chart, which is our trend indicator, showing us, hey, where is the current trend pointing to? Is it rather bullish or is it rather bearish? And we may use this information to further filter our trading ideas. All right. So with this, let's get started. Niklas, are you there? Are you ready to share some charts with us? Perfect.
Yeah. Hey guys, I'm ready to go.
Excellent, Niklas. Please take it away. Go ahead and share your screen. And let's first of all share with our users what are the symbols we're looking for and how are we set up in terms of trading view charts. What is the configuration that we will be using today?
Sure. So you should be able to see my trading view now.
It just came up.
We're going to have a couple different tabs open. So the first one here is 4 different charts, and they're all set to the 15-minute chart. All of the indicators on these charts are the same: MA rush, liquidity IQ, and volume IQ. Volume IQ and MA rush are both set to their total default settings, but liquidity IQ we have set that to a slightly higher time frame of 30-minute chart to get a little bit more of a bird's eye view of where support and resistance might be. We're not using what we usually would use, which is something like a 1 hour or 2 hour reference time frame, because markets are so volatile and things are changing so quickly that I think it's better if we keep an eye on shorter term levels instead of, something that might at this point on something like the NASDAQ be 1,000 points away. So what we're going to do is we're going to look at these right here. And sometimes, depending on what we do or don't see here, we're going to hop over to another tab. We've got them with blue backgrounds here where we're looking at 5-minute charts. And we're going to have some different symbols we look at here, whether we're on the 15-minute or the 5-minute chart. These are, I think, both decent time frames to day trade on, and also decent time frames to hopefully get some opportunities during today's session. And finally, and everything is set up the exact
Nicholas,
same on these charts as well.
yeah, real quick, this is just from, maybe it's my my internet here, but perhaps you guys can confirm. I do see a bit of a small lag when you're switching charts, Nicholas, to what's happening. Are you guys seeing that too, or maybe it's just on my end? Because if there was a lag, maybe just go, a bit slower through your charts, so we can follow along a bit
Sure,
easier.
yeah,
But let me
I
just
just
quickly
changed
see.
one tab. There might have been a bit of a lag. I'll wait a couple seconds.
Yeah, guys, if
Okay.
there's a lag on anybody else's side, please let me know. But maybe it's just my end. Let me just
Oh,
see.
they say I have low volume. So guys, let me just try to turn up my volume. Maybe this is a little better. 1 second.
Oh, for
Okay,
low volume, you
that's
can just
why.
turn.
My volume
Yeah,
should be better now. Okay,
yeah,
sorry about
okay.
that, guys. All right, so
Oh,
those are our two different tabs, one 15-minute charts, the other one 5-minute charts. And finally, we're going to have a tab where we zoom in on charts. So this is our final one here. And on this one, we're going to be on the 15-minute, the 30-minute, whatever we want to be analyzing. So to start off, I'm going to hop back to our split of 4 different 15-minute charts. So that's this tab here. And we've got 4 popular symbols here. One is micro NASDAQ, MNQ, on the 15-minute chart in the top left here. So I'm going to expand this chart, and we're going to take a look at, see what's going on to see if there's a trade set up here. So some things we noticed before the market opened, and the ideal setup luckily didn't happen yet, is we obviously had that huge move up yesterday, which was the largest gain in one day on NASDAQ in all of recorded history, where we ran up from around 16,000, the high 16,000s, all the way to about 19,400. And we can see we had this zone break of this resistance level, price powered through it, came down, and then started to kind of hang out around an old important zone of control where there's a lot of volume. And I think this actually might have just formed since yesterday afternoon. So this right now is a highly contested zone where a lot of traders are entering or exiting positions. It is a tier 2 zone on volume IQ. Now, normally, when you're approaching a tier 2 zone from below, like we are right now, oftentimes, depending on the trend, we will expect price to for this zone to hold up as resistance and for us to bounce down. We're not going to be taking any shorts on NASDAQ today. Just because of the volatility. And I mean, we just had the biggest up day in history. Maybe it's due for a big retracement, but we don't really want to bet against the trend. So on this chart here, what we see for micro NASDAQ as a setup on the 15-minute is one of 2 possibilities. Number 1 is our usual, what we call zone break retrace setup. So if we broke through this resistance down around 18,350, a setup for us that we often take is a zone break retrace, which is once a zone is broken, price flies away, then eventually it comes back down to the broken level, and then that's where we can consider an entry, expecting that level to hold up. With it used to be resistance, now it would hold up as support, and we would bounce upwards. I'm not so sure if we're going to see that today. NASDAQ is up big time, and this level is still almost 500 points away. So that would be a huge move down.
yeah.
Before we
That's
reach
actually
that.
that's a good point, guys. This was such a huge day yesterday that this may look like small moves there, but these are massive ranges that price covered. So keep this in mind that it's been so volatile. These bars are massive compared to what they normally are. So something just to keep your perspective on.
Definitely. So if it did come down there though for a zone break retrace, what do I see here? This is something to keep in mind when you're trading a zone break retrace. We're just talking risk management here, is I would not go long just because we came near this level. If we came here, I wouldn't go long there because I can see this right here is what we call a low volume node. There's not a lot of liquidity there. So I actually wouldn't expect the level to bounce, price to bounce. I would expect us to sell right through it really quickly until we get to an area where there is liquidity and buyers, which I would see is probably around here. The 100, 18, 100 to 18, maybe 250 range. That's where their volume starts to pick up again. There's more liquidity there, and there are more buyers down there. So if we were to get that opportunity, we wouldn't enter here. We would wait to see if we come a little lower to then enter. That's opportunity one, which probably isn't going to come. The other one is we are on a super bullish swing upwards here right now. And so far, we're losing the zone of control. Price is having trouble staying up here. It's having trouble staying above the mid 18,800s, which is right around here. And we can see this is actually a pretty big range, 18,940 to 18,800. That's a big range. If we get above the center of this level, so we break this local pivot, we come up to around here, we're actually going to start to consider a long trade because now we've crossed the zone of control. The average trader who has gone long in the past however many hours, maybe let's say 16 hours, now they're going to be in a profit. There's not going to be this sort of bearish sentiment as much anymore based on volume if we get above this zone of control. So let's say we zoom in here. Let's say we get above, see this volume peak, and then there's another volume peak. I would consider all three of these ranges right here to kind of be the same deal. If we get above, well above here, so we start to crack 18,900, then that is, I think, going to be a decent long opportunity. Not because it's not a good long opportunity already, if we come up a little bit, but it's going to be more confirmed then. And I think we can still get decent reward to risk. So there is so much volatility that reward to risk is difficult on a day like this. Sometimes we're not going to do that because it's not conservative, but you'll actually, when there's such big volatility, what I will do is try to enter in on what I expect to happen once it's almost about to happen, instead of once it's confirmed, because once it's confirmed, like let's say price comes up to here, 18,900, and we decide then we're going to go long one contract. Well, even one micro contract on NASDAQ, for us to have good reward to risk, it would probably be smartest to use some sort of a pivot as a stop. But at that point, those pivots are almost 400 points away from our entry. That's bigger than our risk tolerance, 300 points away. Instead, what I would think would be smart here, if we came up and we started to break 18,900, if we take a long at that point in time, I would actually think it'd be a good idea to place our stop where we start to see sellers come back again and volume start to drop off. Because the whole idea with a tier 2 cross here, if we cross above it, is we're defeating all of the volume here. We're overcoming it. So if we break and then we come back under all that important volume, this setup's really not happening anymore. It's reversed. The cross has failed. So I think a nice round number we can use here would actually be right here. This is where volume starts to drop off, maybe 18,800. So if we get in long at 18,900 or 910, we can place our stop at 18,800. It gives us that's $200 risk. It's 100 points, but on something like this contract today, you're not really going to get better reward to risk than that. It's very unlikely that we're going to find a setup on something like micro NASDAQ, which realistically we could risk less than $200 on because the contract is moving 100 points every 20 seconds or every minute and a half. It's very volatile. So one last thing, I'm going to put an alert there just so we're aware of it. And, maybe the setup today is going to be to short it all the way down to here, but we're not going to be shorting this. So I want to know, are we crossing 18,000, let's say 880? And if that happens, notifications, notify in the app, show a toast notification. So that's going to give us a pop-up. If we cross the center of this level, I want to be aware.
And guys, real quick on that topic on the notifications in TradingView, which is really cool, and I think this is one of the biggest strength of TradingView. You will be notified whether your browser is open or not, whether your computer is open or running or not, depending on the type of notification. If it's by email or perhaps by push notification to the app, you will get this notification. There's no need to be having your browser open or running, which is one of the beauty. You get these offline alerts, as they're called, no matter what, which is quite different from platforms like NinjaTrader or Wave, where platform needs to be running in order to get the alerts.
Definitely. So we don't even really have to be focusing on it. We have the browser open, but it's going to pop up for us. And the last thing I would do here on a 15-minute chart is then once I do that, I want to check out the 5-minute chart. I just want to be aware, what do things look like here? Is there a different zone of control when looking on the 5-minute perspective that I should be aware of that might act as further resistance or might provide a good stop loss? So I'm going to check that out. And what I see on the 5-minute chart, even though it's not a zone of control, because the zone of control is probably way down here. That's where there's even more volume. But I do notice that this is a volume peak. This is an important area, which is around 18,850. So we're not going to enter there because the bigger peak from the 15-minute perspective is a little higher where we place our alert. But I will be aware that we have this common pattern we often see, and it makes sense. It's a liquidity drop off. Notice how volume gets lower and lower and lower and lower, which means as price comes down to these levels, there's less and less people willing to trade it, or at least historically, it's probably going to sell off quickly through there if this starts to get lost. And that's nice from my perspective, because if we went long here, well, that coincides pretty much around where we would place our stop, which was going to be around here. We can see this is kind of seller biased. It just reinforces that, yeah, it's probably a bright decision to place our stop loss where we theorized around 800, because this could happen very quickly, and we can always get back in if we get stopped out, but then it reverses back in our favor. Okay, so that's MNQ. So I'm going to bring it back to the 15-minute, and I'm going to minimize that and look at some of the other charts we have here. So one chart we saw, and I'm just going to talk about this one for a second because the setup is gone. The setup is kind of too late now, but maybe we will get a reversal back up to it. But this is on oil. So micro oil futures, MCL on the 15-minute chart, same indicators. And what we see here is this is the zone of control. There's a ton of volume. Yesterday, when markets rebounded, oil rebounded too, pretty hard. I think it jumped up like, what was that? $55 to $63. It jumped up like 13% or whatever percentage that is. Very significant. Huge move up. And it tried to regain the area, which was around these levels, around 61, 61.50, which was highly contested in the past. And when it broke at the start of this week on Sunday or Monday, when was this actually? That was on Monday, it started to lose it. We had a huge drop. So that's the zone of control. I think it's going to follow the indexes. This would be a nice short if we suddenly come up to it, touch it, but the indexes aren't recovering because I think they're going to be correlated. If the indexes are recovering, of course, it's a big bullish day yesterday. I don't really want to short this. I also don't want to long it because oil is really on quite a violent drop down. Yesterday, it dropped pretty hard too. We were shorting it, but it is something to be aware of. It might present a setup. If maybe the indexes come up, they fail to NQ fails to regain that zone of control, and oil seems to be having trouble too. Maybe it'll be a short setup, but I'm not crazy about shorting things at this point in time. We kind of missed the ideal short entries from yesterday's move. Okay, so that's that. Toast notification. All right, I just want to be aware if it comes up to there. And I want to look now at something we saw on NQ, which is this chart here. And just when I was mentioning I don't want to go short things now, I just want to justify why that is. So yesterday we saw in the Discord that in Liquidity IQ, if we open the settings of Liquidity IQ and set the reference time frame to something really high, like 4 hours, we're going to get super long-term support and resistance levels. And what we'll see is, look at this. We were actually pointed out this setup. I said I didn't want to short it until we went a little higher. Bad idea. But we had a long-term short break retrace here. We broke through back at the start of April when the tariff stuff started coming out. We lost this important 19,300 support level, dropped all the way down here. And where did we stop flying back up yesterday? Right at that level. So that would have been the ideal short opportunity. I kind of feel like we're late to the party. It's not good reward to risk to be shorting down here. If we shorted now, our stop loss would at least have to be like these pivots or the center of this tier two, which is, 200 and something points away. I just wanted to point out that level, why, that is the optimal short opportunity from my perspective. Okay, so we're going to zoom out now and we're going to go to another chart. So we've gotten to learn on oil on that. Let's try to see something that maybe we have a more current setup. One is gold. So let's take a look at gold. Now, not long ago, about an hour ago, when I was looking at this chart with Daniel, before more volume came in, this level right here on the 15-minute chart where there's buyers was actually a tier 2 zone. It's no longer a tier 2 zone. New price action came in, but we can clearly see it's a high volume node, and then there's a low volume node right below it. So we were saying, hey, maybe this is a good setup if we drop down to this level to go long, something like what just happened. And the reason for this is it's easy reward to risk. We can place a stop at this local pivot right below there, or maybe a little bit higher than it. And on the 30-minute chart of gold, we go there, we'll see that just above us is a resistance zone that's lining up exactly with a tier 2 zone. And if that breaks, that might really carry the move away upwards. So here we had a liquidity capture there and it lines up with this tier 2 zone. We were thinking, hey, if we come down, and on the 30-minute, it looks a bit different. That's much longer term. But if we came up to here, hey, that might be a really nice like rocket fuel for a long trade. If it breaks through there and it breaks through this tier 2 zone, that's like 2 reasons to be long. And we're right also near all-time highs, which is pretty impressive. Gold really flew up yesterday after it rebounded. So on the 15-minute chart, Daniel, I think that this one is a nice reward to risk trade entering somewhere here. Unfortunately, as I'm yapping, it moved away. We shifted to this chart while we were just right here, and now it's already gone up 12 points, which is quite a lot.
But I think that's still okay. What we can do here, and my trading personality is always very much quite the opposite of Nicholas. I'm the man of patience. So I don't mind waiting for a retracement, a pullback towards this level there, and then enter. So let's perhaps put a limit order there below price and let price come to us instead of chasing it. Let's wait for the perfect price that we'd like to have, and which will give you the reward to risk that we would like to have. So perhaps yeah, exactly. And by the way, I pretty much always enter by limit order. It's very rare that I pull the trigger with market orders because I'm obsessed with getting the price I want. And the only guarantee this will happen is with a limit order, which of course guarantees you to be filled at that price or better.
So one thing I want to point to, okay, it's really taken off here. We might actually, the new setup might be to watch for the zone break. But okay, we want to be getting in. We don't want to wait too long because I think, it might run away from us. But it's really nice reward to risk here. I think to place a stop loss, not even at this pivot low, Daniel, but right here, right before it, where volume starts to drop off. We do have low volume nodes here, and sellers do start to step in there. I'm thinking something like 31.25 as a stop. That would give us good reward to risk
I agree.
if we got in there, because our target can then be, up here above the zone. If that happens.
Let's see what happens. Yeah, let's see what happens. Of course, if price runs away, then of course the risk is of putting limit orders. You may not get your fill and you miss out on a trade. But that be it, and there will be other setups coming along. But let's see what happens with this one.
Okay, so put in the order. Sounds good.
Yeah, let's do it.
Okay.
Yeah, let's
So
keep an eye on that one.
We'll wait and see, and I'll put this right where then this starts to drop off here, because the logic
guys,
here.
Yeah, and I was just saying retracements happen more often than you think. So even you think that things are taking off. oftentimes, it just may take a couple of bars, a price will recover because nothing ever goes up in a straight line. There's oftentimes re-entry opportunities along the way. So I personally like to wait for those and to get the price I'm interested in. So let's see what happens with this one.
And I'm curious, if we hop back to when we were on the phone together there, Daniel, at 9:15, I'm using replay mode on TradingView to go back to 9:15. I just want to see how the chart looked and what happened to that tier 2 zone. So if you're a TradingView user, you might find today, look how long the indicators are taking to calculate. And why is this? It's because a lot of trading is happening. I noticed this yesterday when the Trump tweeted about the tariffs, then the announcement came out and the markets went crazy. If I switched to chart, my indicators were taking like a minute to load because the servers of TradingView are so overloaded. They calculate the indicators on their end. So when markets are really volatile, sometimes the indicator will take a bit of time to show up. And the reason why, actually, now I'm seeing why that tier 2 might not have been there. Oh, it is here. Okay, so it was there, and then it disappeared as more volume came in. So the idea was initially, hey, if we get it price to come down to there and we enter, then that can be a great spot. And so far, wow, it did come down there, and then it blasted off. So we'll see if we get this. Let's go back now and look at some other charts in our tab. The next one is Russell. So Russell actually up here, it actually kind of came down to the zone. Wouldn't have taken it yet. Maybe there's still time. I'm going to expand this chart. So just like NASDAQ and the other indices, Russell took off yesterday. And it didn't take off as powerfully, though, as like NASDAQ, let's say, or SPY, I think. It tried to zone break, nice zone break retrace, came up, but then it had trouble getting through this old level, this liquidity level back here, which was an old zone break. So it failed, came down, and we retraced pretty heavily through here. The idea on this one is, let me just get rid of this little red line, is that this might be a nice area to consider as where it's going to stop retracing to. One thing I see here, though, is the indices tend to follow each other, right? So the Russell has a sign that, hey, it might stop dropping. If we come down here, we might start to see some support. But what I also see is, yes, this is the highest volume node right here, this range right around 1840. But look at this whole block. This whole block pretty much has high volume. So I would, if I was trading this, and this is just a tip, because I see these things happen again and again, this is the highest volume node of the whole block, but there really is very similar volume through this whole 1820 to 1840 range. So if I was to take a contract here, I wouldn't expect us necessarily to stop dropping right here. Instead, I might expect us to test the whole range, like for us to fade in here where the big liquidity, traders or market movers come in and start buying contracts. And another thing I see is we kind of sell through here a lot. So this is a tier 2 zone. There is a lot of selling. It might go a little bit further than there. And the other thing that I think makes this a bit of a risky long idea is the indices tend to follow each other, right? And MNQ, if we take a look at that chart, let's go back to that. Maybe I can have them both open on the same chart here. So this is M2K, the Russell. Here's where we're expecting it to stop retracing. And 1 second. Here's where we're expecting it to stop retracing, which we're pretty much at right now. But if the other indices still have room to go down and retrace further, and they don't have anything kind of putting the brakes on their retracement, then what if they keep retracing and they pull this one down with it? So I'm just being conscious of that. Maybe we're going to see a bounce here on NASDAQ as well. And maybe it's going to be, maybe NASDAQ is going to follow the Russell. But NASDAQ, if it does keep retracing, does have further to go, and I think it would pull this one down. So I'm not crazy about this one, especially there's also sellers. But what do you think about the Russell here, Daniel? Whoops, wrong chart. Let me expand the Russell chart.
Sorry, I was a bit obsessed with the gold price. So I think you were right there. It's flying away from us, and we're looking at a zone break now. So can we just quickly look there and we go back to the Russell, because I think there we have just a bit more time to react, see what's happening, and go. Because I think we do need
here
to
is on
cancel
the 15.
our order. Yeah. So we are looking to break out that resistance level. We got a liquidity capture right now at this former resistance level once this recalculates. I believe this could be, if we break above this level, potentially a long trade right there at this level. And we just recalculated here on the 15. And yeah,
I'm on
once
the
we
30 minute,
break,
right? I'm on the 30 minute
okay,
because I wanted us to be aware of this tier two that still needs to break. And here's the indicators taking a while because of the market. Usually it's an 8-second calculation. This is like a minute. Okay, it's almost done.
yeah.
And look,
So
look what it
definitely,
says here. Calculation timed out. So it's taking them too long to calculate. What you do if that happens is just switch a random setting, like one of these colors that isn't going to affect anything, and it'll try again. But that's just the name of the game with trading view sometimes. So yeah, we do have a resistance level here based on this old pivot, and there's a liquidity capture coming in.
yeah. So I think if we clear this level, gold is going to fly off even higher. And I might consider now, of course, at a much worse price, still considering a long trade. Um, if we clear this tier two zone to the upside. So let's wait what happens there. But if we clear it, what do you think, Nicholas? I
Yeah,
think then
let me
we're
take a
probably
look
going
at
to
the.
fly off to the next level up there.
I'm going to open up the 15-minute because we have the indicators loaded on this other tab. So liquidity capture, this is the 15-minute chart. And the tier two zone from the 30-minute, the center of it, or the key point to break is basically 3162. Okay, once we break that, then we're kind of home free. 3162. And we're at 3161 liquidity capture. Where would we place our stop? Maybe like where would we do our stop loss on this one, you think?
Just below that, yeah, maybe all the way there. Even though it's a big move. Um, yeah, it's a bit hard to. And of course, we got the liquidity capture there, so we may see some retracement right now. So if we actually come down a bit further, maybe um, if this is being rejected right now, I wouldn't even mind jumping in potentially halfway through if price retraces a bit further down, and then
Okay,
keep
yeah,
our
like
stop
move our limit order up.
a little bit. Yeah, see if we can still capitalize on this. 'Cause I do think
Yeah,
gold looks very bullish. I see. I think
I'd
the
be
whole
interested. Sorry, go ahead.
yeah. No, I was thinking the whole talks about tariffs of China. This is probably not a good thing for inflation, and gold could be the safe haven there. Hey, people are jumping on gold. I think this is what explains from fundamentally this upswing right now, which probably is not going to go away. So I do see gold definitely
Yeah,
bullish.
and what I would do here, because now our stop loss is, well, one thing I noticed here on the 15-minute chart is if we retrace a little bit, sellers right here, then there's buyers that seem to be stepping in here as we're approaching 3150. So maybe move our limit order up to like there.
Yeah,
But then for a stop loss, I'd want to tighten our stop because then the move is even more rejected because we didn't break the tier two and it's more confirmed from the 30-minute chart. So what I would like to do here is then I'm on the 15-minute, go to the 5-minute and see maybe there's something like we can see there for a smart stop loss. That's a little closer. It is now breaking through that tier two though. It's at 3162. Wait for this to calculate.
yeah. If we lose that zone, I think then the gold is going to fly off completely to the upside. That's my feel. But
Yeah,
let's see if we actually clear it completely.
sure. Yeah, we can chase it. And then look on the 5-minute. We have a tier two zone right here. So
Yeah.
we could use that as a stop if that starts to get broken.
Yep.
Okay. And also, from the 5-minute, I don't know if we're going to retrace that much. We do still have a liquidity capture um, happening. So it's still struggling to break through the 3162. This would obviously be a sweet area to have gotten in, or if we retrace there. But if you want to chase it, then we can. Up to you, because we
Putting
could
the ball
enter
on my court. Yeah.
we could enter much higher
That's
and have our
that's
stop loss then right at that 5-minute tier two and keep the same risk that we had previously.
that's where Daniel's FOMO comes in, fear of missing out on that sweet gold move. Um, I mean,
I'm gonna move this away for now. But Yeah,
I
while we're
just want
waiting to
to,
see,
yeah, I would like to see what happens if that big bar there. We may see a temporary rejection of that level, which obviously would be great for an entry at a cheaper price. So let's just, I would either, I personally, okay, this is my personal preference, would either wait until we completely clear this level and then I would just jump in at that point. Then we clear that resistance level where we're at right now, or I wait for a bit of a pullback because we still have this liquidity capture, meaning, hey, there's lots of stuff going on right now. Volume is spiking up. Price struggles a little bit with that level. Maybe some sales are going to come in to drive price temporarily down, and then we could take advantage of that. So let's see what
sure.
happens.
Yep. So I moved our limit order a little higher, but just while we're waiting to see what happens here, I want to get to our other charts because there
Yeah.
might be other setups. Um, so that's gold. So we're watching to see what happens there. So the Russell came down. This is M2K. It came down further into that zone. Now it's starting to see a bit of a bounce. NASDAQ over here is also starting to come up a bit. It didn't get into this low volume node just yet. If we do get there, I think we're probably going to see that sell off down to here.
Yeah.
We'll see what happens. These ones I still think aren't excellent opportunities. Gold's definitely the nicest setup, but we do have some other charts we can look at now. So just I'm going to gold here. I'm going to go to the 5-minute chart just to refresh what our thinking is. So we want to get in on a trade of some sort. Gold does have a lot of opportunity to blast off here. We don't want to chase it just yet because it's still testing an important higher time frame tier 2. It's having a lot of trouble breaking it. That was around 3162. And what we're trying to do here is kind of impatiently get in on a pullback and use this 5-minute chart zone of control as a stop. So if we lose that, then we get out.
The
So
other thing we can look at, Nicholas, so I just say it out there, is silver is actually at a pivotal zone right now as well, if you want
sure,
to try
so
that one
we'll
out.
open that up. Okay, so
Yeah.
I'll swap out our oil chart for a silver chart.
Because silver just came off that on the 5 minutes. We just
5 minutes.
came out of a tier 2 zone. We just basically cleared it. And that could be this is an uptrend for sure. We had a bit of a pullback there. And this could be, even though it says bearish on MA Rush, to me, if just from a longer term perspective, things are moving upwards. We bounced off nicely that zone then. I think now this could be zone break retrace, and we just cleared a tier 2 zone. So to me, that looks like a good long entry for when we're still near that zone with decent risk reward management.
Okay. Okay, so let's check that out on our trading chart here. And silver, of course, that's a huge move. Silver is an expensive contract, so if we can get in a trade when we have really good reward to risk, that's always nice.
Oh,
Let's
is that
see.
silver or micro silver?
This is micro silver, but it's still an
Oh, that's
expensive contract, micro silver.
okay.
Okay, so we bounced. So we've got this. If we come
I
under here
like it.
again, I think we
Yeah,
sell off, so that's good. That's a good stop.
yeah. So maybe a limit order as always, and just I think we're gonna see potentially a retracement. And Scott complimented me, hey, it's good to wait patiently for your trades. Let's do that, and you stop just below. And I like this one because we just bounced off that key resistance level below that. This is our zone break retrace, and oftentimes afterwards you see a price to nice follow through. That's two indicators basically confirming that particular move that we are
This,
looking for.
what do you think of this stop loss right here? Because I think
Yep,
if we
that looks
get
good.
down to here, hey, that's not a
Yep.
good sign. All right, so we'll see if we get this retracement. I don't want to chase it too much. It's up to you,
No,
but I put our
no,
limit
that's
here
good.
just to be patient. Because this was, look at this. This was quite a move in 15 minutes. So it does
Perfect.
have potential. It'll retrace quite a bit. We'll see what happens here. Okay, so we have this one open. Now on gold, we also have an order sitting. I'm wanted to make the comment that silver and gold haven't really been correlating that nicely over the past week or so, or a week
That's
and a
true.
half. I found, like at least in the short term. So I don't think it's that much of a double dip, let's say, to do
But
gold and silver.
that's right. And also, what I like about silver is it's not so much news driven right now because I think gold is very much related to what's happening with China. and the tariffs and counter tariffs and God knows what, it will react very sharply to these news. Silver perhaps is a bit more chill because that's my theory. So anything less news driven, I think, is helpful in this environment. Yeah.
All right, so I got our two charts here open. So 5-minute chart, silver, 5-minute chart, gold. Let's let these ideas play out. And in the meantime, I'm going to hop over to look at some other setups. So on this tab, these are all the symbols we kind of already looked at. So I'm going to open up some new ones. One is micro copper futures. We haven't looked at that. Another one we can look at is, well, we might as well. Well, treasury bonds, yeah, they're very expensive as a contract, but we'll take a look at them as well. And then some other ones like, well, this is a popular one, micro natural gas futures. So we haven't checked this. Maybe this will be interesting. Finally,
I had a feeling we're going to end up with natural gas because I mentioned at the beginning that, hey, there's a news event coming out, I think at 10:30 or something. I said, hey, maybe you're going to end up once again with natural gas. This has been a popular contract to us in the past. Who knows?
yeah, and it's been super volatile recently. So this is the 5-minute chart on that. I'm just seeing, is there anything clearly near a tier 2 zone on these 5-minute charts? No, none of them are near a tier 2 zone. So because of that, we're on the 5-minute. What am I going to do? I'm going to swap over now to the 15-minute chart on each of these charts to see, are any of them at, a resistance, a support, and you know what? Let me just also, because now we're on the 15-minute chart, I'm going to come up here, and here's a tip in TradingView. I'm going to switch liquidity IQ to a bit of a higher time frame, the 30-minute. And then, because we've got 4 charts, we can just right-click on the chart here and select apply these indicators to entire layout. So now all of them are going to use the 30-minute reference time frame. So one last look
Nice.
at what's happening on our little limit orders here. Let's,
Price is going away. I'm having an eye on it. Yeah.
okay. We'll see if maybe one of them will change shortly. Okay, so here in the top left, let me open this up wide. Micro NASDAQ futures. What do we have? So we just failed to hold this tier 2 zone. We dropped off. Now we're kind of hanging out around this ledge or high volume node, this ledge of volume. If we lose this level, 4 point, let's say this, like right, let me zoom in, right here. If we start to drop off below this range, 3 point, maybe 62.5, there's not a lot of volume down here. And the next area that we're probably going to get drawn to, it's going to draw it like a magnet, is probably this support level, which was previously broken, then regained. And if we broke here and we went short, we do have low volume in our favor. We have this rejection up here going downwards in our favor. We've got a nice target area, low volume, and a support, and there's sellers stepping in around there. This one
Let me
actually,
just quickly see what is the news. At 10:30, we have the EIA natural gas stocks. What? Oh, it's going to be a report on the weekly change of the natural gas supply situation. So there's definitely some news coming out of natural gas, but yeah, it's an interesting setup so that if we clear this high volume node there, we may yeah, just accelerate through the downside. I agree with
yeah,
that.
let's wait till 10:30 in that case, because something might happen. And one thing, we usually talk about zones of control. Notice that I'm not going off of a zone of control here. There is no zone of control near us. Instead, I'm just seeing that same thing we spoke about before, which is basically a volume drop off. That this, even though it's not the highest volume node like this, it is important. And if it gets lost, it's kind of acting like a floor right now. And then I'm also seeing, hey, there's liquidity levels that probably are going to act as like a pull for price that might make a good target. Or, once it gets there, we see, hey, is it going to hold? If it doesn't hold, we can move our target a little lower. So I'm just going to keep this chart ready on natural gas, and we're going to add an alert, create an alert. And I'm going to put that alert right, whoops. Oh, I thought you can grab this and move it. I guess not. 362.
Oh, it should be. You can't grab it? Huh.
I think you
Strange.
can do it once it's put in. There we go. Okay. So we've got that alert there. Let's wait to see what happens. I really didn't want to chase silver. Maybe you did want to, Daniel, but I didn't want to chase it just because
I don't want to chase it. I think it's gonna come down.
okay, good. Good.
Yeah.
Yeah, because if we look at the longer term chart of silver on the 30-minute, like look at the size of these candles.
Yeah.
Um, it's not exactly something we'd want to chase. And also look at the downtrend on silver. Like I don't like it from that perspective. Huge move down. I mean, that's 15% lost in like a day. But wow, that was a
Yeah.
nice call from that as a zone. That was a nice zone break retrace right here. So
That was a
hopefully
beautiful zone break retrace. Yeah, we'll see. If we may not get it, but going back to oil real quick. So oil for sure, we just cleared this level. I believe the resistance level. This could be an interesting zone break, a simple zone break trade. Sometimes the simplest trades are the best ones to take because here we're clearing this former resistance level as we speak. And one way to trade this
on
on,
the 15-minute, Daniel,
I'm just on the 5 minute always.
5 minute.
But
Okay, so let me
but I just
run.
see it by scrolling back that there is that we did clear that zone, this former resistance level which we had there. I believe if
Maybe I'm using a different reference time. I'm using the
oh no
30-minute.
that's oil. You're on oil. I meant gold. Sorry.
Oh, you were saying oil. Okay.
Yeah. Oh, I was saying oil. Ah,
Yeah. Let me go
sorry.
into gold. I
Yeah.
think, yeah, maybe. But okay, so let's look at gold. Okay.
So gold now is having a little down bar, and maybe that could be almost a zone break retrace kind of scenario where we can get in at this level and just do an over under trade with this broken resistance level that we jump in now and put our stop just below that level. If you get stopped out, hey, be it. But maybe this little down bar right now could be a way to jump into this if that's a down bar. It's a bit of a lag
It's
here on my
well,
end.
it got bought up very quickly, so maybe people were thinking what you were thinking. Um,
Let's keep
but
it there. Let's see what
I do
happens.
agree with you. And then we could place a stop like right here.
Yeah.
You lose this pivot. And then the idea there, what I would do here is I don't want to have to hold the brunt of a further retracement. Like if it does retrace back to here, I don't want to be, why would I hold it
No,
if we lost this? Instead,
we
what
would
we would do,
not.
exit
We would
here,
wait and then
then
re-enter. Yeah, exactly.
re-enter. Yeah, exactly. So, okay. I think where do you want to put this? Right at the center?
Yeah,
Okay,
let's put it
perfect.
there.
All right. So I think that's reasonable. On silver, it's taken off. We've still got our idea in place there. Let's look now at a couple other symbols. So I don't like oil for any trade. It's way too far away from everything that seems like a good reward to risk. The Russell. So we were talking about it, saying, it's probably not a good one. It came down, bounced out of there. At least, this is a good demonstration of how to use tier twos as expected areas where price might bounce or to catch retracements. But I don't like the fact that for the Russell, I think it was a good idea to avoid it, is that the other important indexes, and we haven't looked at ES, so let's look at that. But on MNQ, yeah, we did bounce out of there. But what did we bounce from? We didn't bounce from anything substantial. Um, we just happened to bounce. So I'd like to wait and see what happens. Oftentimes, I thought, I think it's more important to look at something like a liquidity level. So I would wait to get down to here to then consider a long and where volume starts to pick up. But sometimes during retracements or waves, like moves, you will see price tease the possibility of entering into one of these cutouts. So you see we came down, and then this is really the line in the sand where volume actually drops off, and then there's like a big gap of volume, right? And look where it bounced out. So it bounced out right there. Sometimes I find this happens, and it's almost like, well, most traders have been entering in here, or the market has been trading in these significant volume areas. Not a lot of market activity happened to happen in here. So it's almost like the market is saying, well, there's no way we're going to go down there because there's no liquidity there previously. So it teases going into the low volume node and then it bounces off of it right when you think it's going to finally drop through. So I'm just commenting on that. I've seen that happen a lot. Sometimes, though, maybe that was a fake bounce and we are going to see that. But I do think the only real setup for us here is is preferably a long, and the long either the cross here or a bounce from this liquidity level. It's kind of risky to be getting in here. And the only thing we could use as reward to risk is like this local pivot, which is only held up for, 10 minutes. So it's not very significant.
Nicholas, can you check on gold real quick? Sorry for being jumpy here. I think we should have gotten a fill right now, at least as far as I think.
Want to
Or
make
we
ourselves
just
fill?
hovering. Let's do it.
Let's do it. Make sure we get some sort of a trade.
Yeah.
No, fill
All
us.
right.
All right, whatever. I'll just make us get. Okay, we got filled. Good.
Okay.
Okay, so
Okay,
we'll see
perfect.
that. And let's take a look. Now, what I love to do when I take these day trades is then I like to, whoa, wow, nice little bounce out of there. Good idea. Hopefully that continues. Is what I'll sometimes do if I'm watching something about like a setup like this and there's a reason for it. So, oh, look at this. The news came out at 10:30 on natural gas. Look what it did. It wicked down there. Good thing we didn't take a short. Maybe it
Where
is a
did it
good
go
short
to? Oh,
actually.
there.
But
Well, that is a good.
yeah,
Wasn't that the idea to go short?
yeah.
It was, right?
Let's
Let's do
take
it.
it.
Let's
There's
put
good
it.
reward to risk. Let's do it.
Yeah, let's do it. Yeah, exactly.
Okay, micro natural gas. What was the idea? The idea was to place a stop at these pivots. So 367.
But
It's very
yeah,
volatile. But look at the risk on this thing. It's nothing. We could always scale in another
yeah,
time.
that's that exactly. Yeah, that's a good idea.
And what's a market order? Yeah, let's just do it. Okay. So what's the idea here is look, it's whipsawing. And this contract is like literally, even if we get stopped out, we're losing $20. So maybe we can wait and see if there's some confirmation. And it's a very volatile move right here. So huge up wick, down wick. It's back where it started. So who knows what's going to happen? I'm going to go to the other chart we have over here. Our stop is just here. So if we get stopped out there, big deal. Then if it flies all the way up to the tier 2, maybe that's then another possibility for a re-short entry. And I think, look, this is why we placed this stop here. There's also a zone up here. We could consider moving our stop to something a little wider because it is
Yeah,
such a
make
low
it a bit
risk
wider. Make it a bit wider.
to
Yeah,
maybe up here. And then if we
it's
come up into that zone, that's kind of a test, and we can consider shorting a second contract and keeping our stop where it is.
yeah, and the reason why also I think a white stop makes sense. The news are just coming out right now. They're trickling out, so there will certainly be volatility, and we don't want to be whipsawed out from this just because of news-driven events. So it's always good to have a wide stop in these cases, especially if it's so affordable. So we're trading small. And once again, trading small is, I believe, one of the secret sauces to trading success. Because, whatever happens, it's a small trade and you don't get nervous and you can have a wide stop loss, which you need right now in these market conditions. So that's important.
Yeah, and so the thinking here then would be if we come up to here, so this is why I placed our stop exactly at this level, is if we come up to this support, previous support, and we fly up to there, and this is super short-term support. It's not even very significant support. It's been liquidity capturing for the past 8 hours on the 5-minute. But if we come up in there, there's a reason to then try to scale in again with a second contract, still going to be super small risk. And I placed our stop loss right here because I could see on the volume profile that this is kind of one of those scenarios where this is a big chunk of volume. And previously, it's been an area that's attracted sellers. If we get above that, that's no longer bearish to me. And although we do have some volume up here at this resistance, which maybe a little longer term might be a good short entry, it does kind of have this sort of look to me, where there's a reason, there's a cutout, and I think this would be a driving factor. If we break this, I think we'd probably see this level, and then if we break that, we're probably going to see higher. So I placed a stop above what I saw was a high volume level. So just a nice way that you can also use Volume IQ for looking for important spots. And the thinking here is if we came up to here and the sellers that historically have caused a lot of selling here, if they come in and it holds up as a resistance or a ceiling, well, that's good. And if they don't hold up, well, it's no longer such a bearish setup anymore, at least on this super short term. And we should also take into consideration, micro natural gas has also had a huge move up from yesterday. And this is a retracement. The move might continue. Okay, so gold kind of retracing a bit. I think we should also now keep an eye on whether or not we are exposing ourselves a little too much by having our silver trade in as well. So let's see this.
If you're thinking you're they're correlated too much, is that you're thinking? Because silver, as you
Well,
pointed out, it's been actually quite bearish, whereas gold, of course, was super bullish. I still
yeah,
like this one. I still like it for a
it's not
retracement.
it's not bad, but our stop here is like it's right at the center of this, whereas we should technically be expecting it to test even the bottom. And for it to still liquidity capture. But at that point, actually, you know what? We lost this tier two. I think what I'd do is instead just move this up a tiny bit.
Yep.
What do you think?
I
Just
like wider stops. But no, but it's keep it there where it is. It's
okay.
especially once again, and this goes back mainly to the current market environment. It's so volatile, and I think wider stops are required to some degree. But let's see what happens with silver.
Yeah.
All
And
right.
the idea here too is well, it's this tier two zone we base the entire trade on. So if it gets lost, yeah,
Yeah.
might be a little bit more of a pullback. Okay, so now I'm going to, sorry guys, if this is a bit confusing, but I'm going to split it up a little bit more just so we can have all three of our trades on the same chart. So price came up on micro natural gas here into this zone. And I'm curious to know what the news is, and not that I know how to interpret it, only high importance. Let's turn that off. And 10:30 forecast 26 actual. So I have no idea how to interpret whether that's a bullish or a bearish piece of news. Perhaps there's less. What was this? How much the supply? Maybe there's less supply than they expected, which would drive prices up. But I'm just making a wild guess. Let's see what happens here. So we're quickly coming up here. And this area is then where we would consider taking a second entry. But I
Yep.
want to see, does
That's
it come
that's
all the way up to
exactly
here?
that's exactly what I was thinking too. So this is could be, sometimes scaling in, and especially if it's so affordable, and if you scale in, you're still within your risk tolerance, could be a good idea. Um, and then just doing some dollar cost averaging. I just wonder the stop loss there, and this is my weakness. I had to move my stop loss to the worst. What was you thinking there again, Nicholas, to put that stop loss exactly there because it was above that zone of
This is a
control?
volume ceiling. There's a lot of volume here. If it breaks that, there's like a little drift up here. I think if we break this level, we're at least going to go up to the next magnet zone, which is up here,
Yeah,
because we will have regained a support. We will have not dropped off into this zone. We will have overcome these big chunk of sellers, which were causing all these liquidity captures overnight. There's less and less bearish things in our favor. So I wanted to keep one contract here to see if we hit that stop. And because right now we're
that's what.
coming up,
Yeah,
one thing I
yeah,
notice is historically at this level, we've been getting a lot of liquidity captures. Right now, we're breaking through that support and there's not even a lot of volume. There's not even a liquidity capture. So that's not bearish. That's not a good
yeah.
sign for a short trade.
But can you
Um,
make that chart a full screen just real quick?
sure,
Because I want to
yeah.
see the big picture, so see a bit easier what exactly is going on.
And let me hop over to the 15 minute because I don't usually plan trades from the 5 minute. Usually plan them from the 15 and then look on the 5 minute for better entries and stops and stuff.
Because what
So
I'm seeing, and this is just by looking at the chart with my naked eye, but with my eyes, is that I see like a stair-stepping move to the downside. We're making somewhat lower highs across the board. So I think this pattern is really only broken
ooh.
if we go above those high points there. And since this is a cheap contract, I wouldn't mind even putting my stop loss just above those ones, because then I think that pattern of stair stepping is broken, and then we would get out of it.
And
But before this happens,
that's a
yeah,
great point. So I moved the stop, and why that's a great point. It ties into, hey guys, don't have time frame tunnel vision. I almost just made that mistake. Like while we're doing this, maybe I'm a little
uh,
distracted.
that's
Um,
that's why I think pair trading is a real thing.
Yeah,
For
hop
those of
over to look what happened here, Daniel. So not only is there pivot highs, but when we go to the 15 minute, the tier two is right there.
yeah,
So it wouldn't have made sense to place a stop where we had it, which was before that even got to be tested. So placing the stop here, we give price the chance to come up and try to break the tier two, and the pivots just happen to line up right when they break it. So it's the perfect stop from that perspective, from a technical perspective, I think. So it lines up. And if we come into here and then we start to not break it, then we can scale in a second contract, I think, because that'll be a tier two rejection and the stair stepping, like lower highs, as you said.
Yeah, exactly. Good.
So let's
All
wait and
right.
see what happens.
And
Let's take a look.
I would consider, honestly, if it comes back up there again to put a second contract in for shorting it, I should scale out.
Oh,
All right.
you wouldn't put in a
I
second
would.
contract?
Oh, I would. I definitely
Would.
would. Yeah, yeah, for sure. For
Yeah. Yeah, same. So wait to see because we took one based on a shorter time frame. The immediate expectation was that we were going to drop through the low volume node here. Didn't happen. Now on a higher time frame, if we come up to here, this is again a good short trade. So we're already short one. It's very little risk. Short another one right here and leave our stop where it is. Okay, so I want to go take a look at the other charts now. Let's take a look at gold. So gold's moving a little bit. I'm just going to make this a two chart thing so we can look at silver and gold at the same time. So silver, pretty crazy, 5, 15, even 15-minute. Look at the size of this candle. This one almost gapped.
yeah,
This gapped
it
up and it's moving with gold now and it is bearish on the longer term. Um,
it is
also
it
look,
is
yeah,
I'm not so convinced of silver anymore. You're right. I liked my main thinking was, hey, this is zone break retrace there. And oftentimes prices will take off afterward. That was my thinking just by looking at this little snippet right there. But of course, if you zoom further out, and this is what you just said about time frame tunnel vision is, it doesn't look as clean because we're just coming out of a massive short trend in silver.
yeah, and one other thing is if we look on, so on the left chart here, sorry for jumping around so much, guys, but when we were thinking about the silver trade, we had liquidity IQ on the 15-minute reference time frame, which is super low. So if we put it on the 15-minute, let's wait for that to recalculate. 1 second. Did it already recalculate? It did already recalculate. Oh, maybe I'm mistaken, but I thought that there was a level a little bit closer to this tier two. For some reason, this looks a lot further away than it did not so long ago. I think we had liquidity IQ on a different reference time frame. Because if I remember correctly, the support that it bounced off was like right here or something. Anyways, yeah, it's not as nice of a setup as, let's say, gold. Okay, so
Gold
let's,
is also not. I mean, we took gold because I thought, hey, sometimes the simplest setups are the best ones, and zone break is a good setup to trade. Even though I prefer if we retrace first to a key level and then get into it, but this was more like a breakout setup. But yeah, I mean, it panned out so far quite okay. And I think in gold, at some point, I would just move my stop to break even there because if this actually goes back all the way down to that zone, I would probably consider a different setup if this happens. So maybe we can move the stop here to
yeah,
our
and one
break
thing I
even
want to
zone.
do as well before we um, move too much, or maybe even consider taking profits right now, is I want to look at now. Now we entered gold on a zone break, but we didn't have a target, right? We just had a stop. So what I'll do now is zoom out to a higher time frame, the 30-minute chart, put liquidity IQ on something higher, the 2-hour chart, and see what's happening on that. So on the 30-minute, we can see that what we entered in on longer term is actually a tier two zone cross on the 30-minute chart.
Yeah.
So I mean, we did move our stop, but the zone break that we saw based on that resistance doesn't even exist on this higher time frame. Like the resistance that was broken, I think it was based on these pivots here. So
Yeah.
we've broken those. I don't know. What's your thinking? Move the stop up? I'm kind of wondering, should we give it a little bit, give it its time to try and hold this tier two?
All right. Give it its time. That was just my
Are you
my
sure? You don't sound very
No,
convinced.
that's good. It's good to have white stuff. I mean, once again, I just thought, hey, if we lose that zone, we probably gonna retrace a bit further down. But yeah, move it down a little bit. It doesn't matter. Yeah,
I'll
give it
leave
a
it.
bit
I'll leave
more.
it where you said, which was the broken zone, and the broken zone is technically these old pivots.
Yeah,
So we can put it here. I just thought putting it exactly break even might be a
Might be a bit
little
too tight. Yeah,
too tight.
definitely.
And even here, I think it's better to let it play around. Although, we don't want to I think what I would do in this scenario is when we were up here, hindsight 2020, or if we still hold a profit, is either leave the stop a little wider or just take the profits as they are if we're not going to be willing to let it test kind of this zone. And what we
I
could see here though is look at this
I
division
think
between
gold
buyers
will
and
fly
sellers.
off. That's my feel. We're gonna see if we have the patience. And you're right, let's keep this stop a bit wider. I have a feeling that gold will be one of the big winners today. It's just my feeling. Of course, intuition is not a good advisor sometimes, but um yeah, it's
Because right now we've got a lot of buyers, and this has been the zone that we've been talking about for like a week. I'm surprised it came back here so quickly. Is price has been repeatedly bouncing off of this area, either from the top going back up or from the bottom bouncing down. Like back here and back here, price came up and bounced. Came up here, bounced. Came up here, bounced. Flew up, came down, bounced off of it again to the upside. And look at all these pivots. This zone is constantly acting as a resistance, and we just broke it. So that's a good sign. And right here we have this division. We have a lot of volume here on the 30-minute chart. We've got this division that actually kind of like clearly tells us the tale of what I just said is this zone, the center of it is important. And when people are above it, they like to buy. And when people are below it, they like to sell. And right in the middle of it, they're kind of unsure. So we've got like this nice division here. So I'm putting our stop, like let's say right here, because if we fail to hold the buyer area, we fail to hold the upper half, we lose it, we break through the neutral area. Now we're getting into the area where people start to panic and sell. So let's get out before they panic and sell and bring us down with them.
good point. Let's do it. All right, sounds good.
Okay. All right. So let's check this one. I want to see what's happening. Let's close this out. Let's see what's up on silver. Silver, okay, so we just looked at gold on the 30 minutes. Let's take a look at silver. Usually on the daily charts, we're going to look at the 5 minute. We like to look at the 5, 15, and 30. Usually I personally look at the 15 for setups. Then the 5 minute, if I want to get like, okay, where exactly should I enter? And then the 30 minute when I want to see, well, if I'm going to hold this all day, what's the bigger picture? So let's take a look at silver on the 30 minute with the 2 hour reference. Kind of a crazy scenario. Huge zone break. This is kind of actually a good sign for the idea it's going to go up, that we might get a zone break retrace, but it's definitely not bullish like gold. And we are into an area where people historically sold. There's not a lot of volume, so it might power through there. But we definitely can agree that it's not a hot setup like gold is on silver, at least in the longer term. Like if we were to hold this, until the afternoon, a lot less optimistic about this one than gold. Let's take
Yeah.
a look at what's happening on gold. I still think, we're only running the session for another 50, 45 minutes. Let's try to think about this stop. I think it's a good stop because we can always re-enter. Like, look, if we stop here, we're stopping out 4 points away from our entry, which is like nothing. And if we were to re-enter and it proves we were wrong and maybe it holds this big chunk of volume and then powers through again, you could just take the trade a second time and you're only missing 4 points that we got stopped out on.
Oh yeah, that's totally fine. Yeah.
All
Yeah.
right, well, let's see what happens on it. On the longer term, where would we put our target? If it had, I would probably be thinking like
At the
maybe
end of
I'd be
near the
conservative and put a target here where people start to get neutral and selly. But a good target's also like the all-time highs might be a bit too much to ask.
is
What do you
that the
think?
all-time high there? Is that
Yeah,
the
it's the
all-time
all-time
high?
high of gold ever, right there.
Yeah.
But we'll see. I want to check out our micro natural gas trade, and maybe we'll look at
Yeah.
that one too on the 30 minute. Um, okay, let's get rid of these drawings. And I saw some interesting fact about gold. It's at the all-time high right now. But oh yeah, the fact is that the median average house or the median household price of a house in the United States is the exact same amount today as it was in 1970 if you measure it in ounces of gold.
What?
If you
Say it
had
again.
if you had 37 ounces of gold in 1970, it would have been able to buy you the average American house at that time. And now it'll do the same thing.
Wow, that is a great statistic and proving once again that gold is a safe haven against inflation.
Yeah,
Imagine
I mean, the average
what
house was
your dollar
70,000 or
amount.
something.
Yeah, exactly, exactly. Wow, that's interesting. Definitely an interesting fact. Oh, you get all these nice fun facts, Nicholas. Good.
So micro natural gas here. Okay, we're in this little buyer block. Not a lot of volume though here. The whole idea was this, right? That we were going to see this drop off and then we're going to fly down, hopefully into this low volume node, and then consider taking profits in maybe the low 50s, low to mid 50s. So far, would have been a great idea to scale in again, but we were being conservative. Nothing wrong with that. We'll see what happens here. Let's take chart back to gold. Good news. And let's look for other setups. See what else perhaps is happening. So on Nasdaq, this was
Yeah, I
again,
was just about to say what's going on there. Yeah.
what were we bouncing off of? Nothing. And when we came back up, it wicked just into the bottom of this tier two, then it sold off again. So until we get up to there, I wouldn't be interested in trading this long whatsoever unless we come down to here. So there's that. And while we're going, Daniel, maybe we have, and the Russell, same scenario. Maybe we have some questions we can get to.
Yeah, we
Or
actually do have questions. That's a good point. We're kind of you know, waiting a little bit now. What are some of the questions? Let's do a technical question first. Let's do Chris. He's been waiting for a while. So we did publish an update for Liquidity IQ, I think yesterday or the day before, where you added a new transparency feature, Nicholas. What is this feature?
yeah, so oops,
Chris is
sorry,
wondering.
my microphone
Yeah,
sounded a little off. So we had a request from Gus who said he doesn't like these gradient fills. So what I mean by that is on Liquidity IQ, if I turn everything off, except it, you could see between some of the resistance and support, it's the higher time frame resistance, higher time frame supports. It'll do this gradient background fill to help you. The idea is to help you keep an eye. Maybe you're zoomed in like this. It's just to keep you aware, hey, you're actually inside of a zone. You're in a range. And when you're above resistance or support, or important resistance and support like back here, well, then it also makes it clear that, hey, you're in, like, it's like blue skies ahead. You're not within a range. There's nothing above you as a higher time frame resistance or support. But some users find it distracting, this stuff. So now you can turn it off and you can change its opacity. So in the options here, down here in structure display, liquidity levels, you can say show support or resistance range fills. So you can turn them off entirely, which I'll do, or you can change their transparency. And by default, they're at
that's
94,
cool.
which is pretty transparent. But you can also do something crazy like this, and I'll see how that looks if we made them super dense. And when they're super dense, I think it makes it clear when there's a zone break, although it clutters the chart terribly. But like this, so here you could see, okay, when are we inside of a range? And when have we clearly broken out of a range? But anyways, that's way too dense for me, but now those options exist.
Whoa, that is dense. Yeah. Go to the 5 minute chart of gold just for fun. I want to talk about chart patterns.
Mm-hmm.
We don't need any indicators for. And one of the famous patterns out there is the flagging pattern. So we have a clear flag in gold right now, a bullish flag, which we can talk about. So if you just make this a little bit, is this gold on the 5? Yeah. See, a big flag post there to the upside, and then the flag is forming right now. That's a bullish pattern. Means like after this bigger move up, things are consolidating a little bit right now, but it is not unlikely that hey, this bullish move will continue. At least that's what the flag pattern suggests to the upside afterwards. You see this where the flag, let me draw it real quick, Nicholas. It's one of these classic chart patterns,
Yeah,
which
I'm gonna
everybody can
see.
spot just by looking at it.
Uh, well, I could also just draw it. 1 second.
Yeah,
Oops,
let's just draw it.
my bad. I swapped this over to silver. Yeah, so you have your flag pull like this. Oh, that's a little messy. But then price starts to form kind of a flag that looks like this up
Yeah,
here. And the idea is the flag breaks if you lose the lower end of it, which is why, we didn't even consciously do this, but we've got our stop down here. And the thinking is it'll get tighter and tighter and tighter, and then eventually if the pattern plays out, it then blasts off through there. So it's kind of like we moved up and now we're consolidating. And yeah, definitely a
That's a
flag
bull
pattern.
flag. Yep. All right. Okay, good. Let me go through some other questions here. What do we have? Let me start from the beginning here. Okay, we have
Natural
some
gas going on
requests
nicely.
for some, yeah, for some stocks. Ron, for the stocks, we can maybe at the end quickly look at it at some longer term stocks. If not, for sure on Saturday, which is only 2 days from now, we can review some longer term stock swing trades when we have our live scanning session coming up. So that's there. Uh, Garrett, I did send you the annotated chart. I'm not sure if you've seen it for Parker Hannifin. So let's also skip that one for our live scanning session for swing trades. All right. Chris, we answered. I'll do this one. So let's keep the stocks for the next one.
Can you look at 6E? Yeah. So I'll look at that. And I just, before we go to 6E, I just want to point something out here for everybody of how, and Daniel, because you know we are closing the session at 11:30. We want to figure out, well, where are we going to exit gold? What's a smart point to exit gold? So with the time constraint we have, I don't think it's realistic that we're going to see the all-time high. Maybe we will. But what I'll do instead, if I'm looking, and maybe I think this is a little overextended. I mean, we did fly up all the way from 2,900s, and we haven't stopped flying up. It does range quite a bit. So where would we consider as a potential target? Well, what I would do is zoom out a bit here. So I'm on the 30-minute and look at volume IQ. And where do I think sellers start to step in, which might end up being like what might act as some sort of little intermittent mini resistance? What I would see is we've got one of those volume drop-offs right here, which will probably accelerate price towards the all-time highs if we make it there. But in order to get to that range, we do have a fairly significant little chunk where people like to sell. So people like to buy where we are right now, but then they like to
And,
sell here.
and maybe point out where you can see this. It's a bit hard to see, but it's at the right end of this volume bar. See this little reddish thing there? It's a bit hard to see. That's a sell bias price area where there's more sellers than buyers. It's not a cluster because it's just one bar basically, but it's a sell cluster. Yeah, that's a good idea to potentially have your target right there.
Yeah, and
It's
it's
good.
sell and there's neutral here. And yeah, so if we're around, if we reach that range during the session, it's unless we fly right through it, I think that's a good spot to take profits if we don't get stopped out. And let's
Yeah.
take a look at our micro natural gas. And
And
then, sorry, Daniel, to interrupt the questions.
oh yeah, so let's look at the micro. Okay, that's looking
M6E
decent.
was a question. Can we look at that? Wow, what a
Flying
crazy
off.
chart. I'm curious to see what would we have seen on the 15-minute if we had looked at this earlier today with our setups, 30-minute reference time frame. Crazily taking off. Well, if that's taking off, the American indexes probably are dropping, eh? Yeah. So micro NASDAQ is dropping. Maybe we're going to see that. I thought it was far-fetched, but we did have a huge move yesterday. Maybe this will be a
Yeah.
nice bounce opportunity later today, coming
And
down to the low
if you
2000.
believe like all these TikTokers and YouTube shorters, the whole tariff conundrum that we're facing right now, one of the objectives, but who knows if that's true. I'm just saying, repeating the rumor here, is to weaken the US dollar, which in turn will benefit the US economy, some people say. So perhaps what we're seeing in the euro right now, where it gains against the US dollar, is a side effect potentially of that. So, yeah.
Yeah, I've heard that too. Yeah, so that they can refinance the debt or pay it off easier. Um, okay, so here, all right. What would we have seen? I wouldn't have seen anything that would have led me to this from volume IQ, but clear zone break. This
Yeah.
happened before the market
Hey,
opened.
sometimes the simplest setups are the best ones. Zone break, a classic one as per our liquidity IQ indicator. Love it. And if you
Yeah,
see a retracement there, and this is like a heads up for later on this afternoon, back to that zone, we're clearly bullish. There's some volume right below there forming as well. This could be an interesting long opportunity or re-enter into this trade. I wouldn't chase it right now. It's extended. If you're in it, congratulations. Enjoy the ride. But if not, wait for the retrace and potentially, yeah, enter there. And
yeah,
gold
and
is flying off. If you want to look, maybe it's very close to our target now.
Sure. And if we came down
Yeah.
here, I would a good reward to risk because there's sellers all here. So I would wait to see, do we hold through these sellers? Then if we break this, I just get out because there's not a lot of buying volume, or there's historically sellers there. So it'd be good reward to risk. Yeah, so let's see, are we at our target? Oops, drawing tool. Um,
Not
crazy drawings going
quite.
on here. Yeah, maybe we should just take it, eh? Because we did touch our stop,
Let's take it. Yeah,
our
let's
target.
do it.
Yeah, we're not going to hold it the whole
Uh,
time. Yes, close.
it's good to ring the register, at least for your first trade. It sets the tone for the rest of the day. That's what I
Yeah,
find. Even though this is going to fly out further, there's a good likelihood that gold is going to be the winner of today. I do want to. So if you're a time limited trader, as we are right now, and I think many of you may be, because you perhaps only have during your lunch break of trade time or maybe before dinner or something, hey, then you have to ring your register at some point because you want to walk out of this trade. You want to check it off, done, and then move on with your lives. And then
yeah.
it's
And
nothing
like,
wrong
look, we
with.
took our profits where we said we would, which is when we got to the seller zone because we're time constrained. But we also said if it just blasts through there, then maybe not. And look what it did. It did just blast through there. It's not crazy. If you're still long this, I wouldn't exit yet. I'd see how does it behave at 3180, which is the next place people historically sold. Um, but this is it's if it blasts through here, yeah, I think we're probably going to see all-time highs today.
Or at least testing that level. That is a good possibility.
Yeah.
How's
Well,
natural gas doing? Let's check on that one.
um, okay, well, it's still chilling out and going according to what we thought is going to happen. I'm
I
wondering if it's
still,
starting to slow down because it's being
I,
pulled up by other things, like gold and maybe not. But
I still like the stair stepping. So even if we pull up a little bit right now, I would
yeah,
even
this would act
consider
as resistance.
yeah, maybe even put in a second contract. And I think I do think this is a very bearish symbol, and we may see a lower low, which will bring us all the way down to this level. So that could be, yeah, if price comes up there again, maybe consider reshorting this. Um, just for some extra exposure here to the short side.
Definitely.
Yeah.
So here, yeah, and that
Okay.
support we saw here was super short term. When I put it on the 2 hour, we see what we actually kind of were thinking of trading here is we scaled in and we lost important volume, but it's really kind of a short break retrace setup. Short break fails to hold it, drops down. So this is actually a nice spot to go short again if we came up there.
Yeah. We have a platform question from Jeffrey. Um, he's asking, do you think TradingView has any limitation as opposed to Modern Wave or NinjaTrader? Yeah, there are. I mean, every platform has pros and cons and strength and weaknesses. So just my view, and Nicholas maybe chime in. One of the key strength of TradingView, of course, it's cloud-based. So it runs in your browser. You have nothing to install. Every update is always there. If we update indicators, they're always there right away. You have nothing to do. And you get these awesome offline alerts, and the charting looks beautiful. They probably have the most advanced charting. NinjaTrader and Motivwave have the big advantage that you can auto trade on those platforms. So you can have your bots running there and they will just execute for you. That's what is not possible in TradingView. You can back test some stuff in TradingView, but you cannot auto trade. So that's not a possibility there on TradingView. And Motivwave and NinjaTrader have advantages, even though TradingView is catching up on this one when it comes to scanning, for signal scanning, custom scanning. So that would be my two limitations of TradingView: no auto trade and limited amount of custom scanning for now, but they're catching up on this.
Yeah,
Nicholas,
they're
did I miss
catching up.
anything?
Sorry,
Yeah,
sorry, Daniel, go ahead.
yeah. Did I miss any pros and cons from your point of view
No, I
for
don't think so. I
TradingView?
think one thing on the trading view that's good relative to the other platforms is, yeah, definitely the alerts, and they are advancing their scanning. And once their scanning becomes more use, or it's almost there already, it's their beta scanner. So perhaps it's going to have the same type of capabilities as other platforms, but it's also going to be a lot faster, I've noticed. So it's definitely got an advantage there. And yeah, they have no strategy builder or automation. I think in the future they might make us some sort of strategy tester, but they have made no announcements about allowing automated trading.
Yeah. Yeah, and Chris actually put a good point here. His 2 cents says he's using Modifwave for research and Trading View for execution. I know what you mean by research because in Modifwave you can have all your different I guess I forgot how they call it, layouts or profiles or something, which we can have different annotations and they're all saved beautifully, which I think is more advanced than TradingView. And they also have stuff like the auto Elliott wave counts and Gantt and harmonics all built in. So yeah, I see where this is coming from. And Nam says, do we have volume IQ for NT8? Yeah, we do. I'm not sure, Nam, what platform you are on right now, if it's TradingView, but we do have it for NT8 as well. So if you're interested in this, send me a mail afterwards and we can look at some options.
And one other minor limitation, which we saw today of TradingView, is everything's calculated server side. So sometimes if you don't have an advanced plan and the market's super busy, maybe your indicator will say, oh, it took too long to calculate a couple times. So like today, before when the markets were just opening, we had that thing where the indicators were taking like a minute or 50 seconds to calculate. Also because we have the most advanced trading view plan, which means it loads like 25, 30,000 bars and calculates it for all of them. So maybe it wasn't the same on your end, but just based on that, I actually had Motive Wave open on the side with our indicators just in case they weren't going to calculate fast enough and we had to act. So one thing I want to point out here, a setup is we're not going to be taking it because there's not much time left, but is the Russell. So the idea on the
I thought you're
Russell,
gonna say we're gonna enter long gold again. I'm
no,
kidding.
no, I would not
Just
chase it
joking.
down. I'd wait. It's now getting to that last bit of resistance that we saw around 75, but no. But on the Russell, so what we noticed on the Russell before at the start of the trading was we said this might be the spot where it stops dropping and it's going to be a good long opportunity. But then we said, you know what? We're not going to take that or consider that because the other indices like micro NASDAQ on the left here, which could drag this one down if they start to plummet, they have further to retrace to find an important level, which is probably like this area down here. So I would actually be looking at the Russell now, very risky trade because the market's obviously had a huge move up and who knows what's going to happen. But I would be eyeing the Russell for a short actually here because I see there's a lot of sellers on the 15-minute tier 2 zone. And if this zone doesn't hold up, it's technically a cross. And the other indices, if they don't recover, well, they have further to drop. And they're probably going to drag this down through that seller block. And I would wait until this one or NASDAQ or ES find support. And then once they do, then I would exit my short on the Russell. We're not going to take that. And that's kind of a crazier trade based on how volatile things are. But yeah, that's the thinking. And we can see that NASDAQ, the market right now, is trying to hold on. It's holding its breath, saying, "Hey, I hope we hold 18,600 because if we don't, there's that big volume cutoff that's going to very quickly drop us down, probably to here." So, yeah, we're seeing that. So I'm going to keep an eye on that. They might actually be good little short-term scalp opportunity there. One we haven't looked at today, which I want to look at, and I think we should exit our natural gas here because we're getting into the buyer zone and we're starting to get to
Yep,
the end of a low volume node. So
let's do it.
wait a
All right.
second, and let's just exit it. We are technically starting to see buyers.
I would totally reload. Yeah, exit this one. Reload this trade if it goes back up, if it retraces. That to me is still super bearish. If you get a bit of retracement, just re-enter and rinse and repeat.
So
Same
I want to
trade,
make
by the way.
sure. Yeah,
Yeah.
if it comes up to here, remember on
Or
that
even
other
or
time frame, it was a
either there or just a little bit higher, even to that other volume hike there. Yeah, just
all the way
there.
up here. This is
No,
also
no,
on
no.
one
A bit lower. Yeah,
here.
there. I would say. Yeah, why not?
Yeah, one contract. Then if we come up to here, another contract, and easy risk management right there at the top of these pivots.
Yeah.
Yeah, I'm gonna watch that today. Okay, so today, all right, it was plus 224, 225. That's Canadian. I'm just checking to make sure we have no working orders, so all of our orders are filled or canceled. That's good. Always make sure you don't have any outstanding orders that you forgot about. And let's
Yeah,
see
and
gold.
let's
Gold's back at
let's
our target. Just good sign for us.
what do you mean gold is back at our target?
Well, it's kind of, I think. Well, where did we exit actually? Maybe I'm wrong. Did we exit at 74? Or did we exit at 75? It's 72.
Okay.
Let me see.
Look at
Filled
the trade history. Yeah.
gold. Oh, we market sold at 72 and it filled us at 71.4. Okay, so I'm not right. But we are seeing it's chilling out where we expected it might see its last bit of resistance, which was this neutral level and this sell level, which is why we exited at the sell level. If this pulls, it doesn't look like it's going to, but if it pulls back, I think this is a decent long scalp opportunity again.
Yeah. Okay, let's answer some questions. Okay, Jeffrey said what he doesn't like about NT Ninja Trader is he can undo drawings. I didn't even notice that. Okay, yeah, because we do most of our drawings on either Model Wave or Trading View. But trade management is awesome. Yeah, there are lots of built-in nice ATM strategies in Ninja Trader available. ATM standing for Advanced Trade Management, where once you enter if your stop automatically placed, you have things for like scaling out of a position, trading your stop, and other features. Yeah, that's really cool. Also, Model Wave has a lot of cool ATM stuff built in, by the way, and you can customize your ATM very easily there as well. So perhaps something to consider. And then Jeffrey said also he's long ES at 5,320. Can we look at ES? What
Yeah,
is
so
that
I'm looking
level?
at ES here and I'm looking on the 15-minute chart. So that trade's panning out so far. And what about the other indexes? They're also bouncing, so pulling M2K is holding here. So that trade's working out well so far. Nice. Um,
Yeah,
what would I be thinking here? Again, like we were saying about the indexes, Russell is the one that actually has high volume support here. So maybe it's kind of the driving force for keeping the other indices from falling further. But on ES and NQ, I don't know. I mean, good. I wish you the best on the trade. We are starting to fall into buyers down here. So just below, actually, no, yeah, just where Jeff entered is where the seller block here stops and buyers start to step in and volume starts to pick up. So this is a very different picture from NQ. NQ doesn't have that volume, but ES does. Whoops, ES does have that volume, and so does the Russell. So maybe that was actually an excellent spot to enter. Yeah, we didn't look at
yeah,
ES at all today. One thing I wanted to, oh yeah, Daniel, this is unrelated, but it is related to Ninja Trader. So you're talking about the ATM and stuff. We had a question from Dean, I think it was, saying, hey, he was interested by the dynamic position sizing from the Motive Wave strategy builder with Super Trend Bullseye.
yeah.
And he said, hey, you can't do that in Ninja Trader. You can set different contract entry sizes, but you can't have it on the fly dynamically calculated based on the stop loss, right?
That's true.
It's
Yeah,
not possible.
yeah.
So he tried out a different company, some third party, I forget what it was called, Shark Trade or something like that, something along those lines. But he said it wasn't working out. And he said, hey, well, what if you add a certain feature to some of the indicators? And actually, I suggested it first, and then he said, well, it can be applied to all of your power bundle indicators on NinjaTrader, which was in Super Trend Bullseye, because you can't do dynamic sizing in the strategy builder. Instead, inside the indicator, you have two inputs, one which is maximum risk, so $500, $1,000. And then once you input that maximum risk into Super Trend Bullseye, in the indicator, it exposes a plot that will tell you what would be the resulting amount of contracts or entry size based on the current trailing stop. And then you can use that plot to determine your position size in the strategy builder. So that's actually a pretty interesting idea, I thought, for Super Trend Bullseye on NinjaTrader. And it's a way to do dynamic sizing
Yeah.
with indicators that have stop losses.
And Jeffrey, just on that, yeah, thanks, Nicholas. It's perfect. Context switch back to Jeffrey's trade on the ES. He said, good session. He just posted a screenshot, and I didn't know you can do this. He posted a Ninja Trader screenshot on Trading View, I guess in part of their blogging or posting charts feature. Yeah, I mean, I always get the shivers when I see these custom Renko charts. Nothing against them, but we get so many questions when it comes to our indicators because that's a third-party tool, and sometimes they behave kind of differently from the built-in chart types of NinjaTrader. So we get so many questions, and lots of our customer support is surrounding these different chart types. But no, for sure, if it works out, how you're trading. That's amazing. Congratulations on that long trade on ES. Looks good.
Now, Daniel, I just tried here. If in case you didn't know, or anyone didn't know, you can actually put, in case you do your little ideas, you can put images on your charts, like in TradingView. You can paste them.
Oh, that's
So I
funny.
have a motive wave
Okay.
chart on a TradingView chart. Okay, I want
Yeah.
to see what's happening on M2K. So I was liking this one for a short, because I think Nasdaq is going to drop quite a bit if we lose this. Too late now. Maybe I'll take this one after the session. Or yeah, too late to enter this. Gold is still flying up. Natural gas, let's take a look. And then maybe if we have any symbol requests that we could look at. Whoa, look at natural gas. What a call. Um, we got out a little too early, quite a
Let's
bit too
reshort
early.
it.
But
Oh no, it went down. It went down. Oh, I thought it went up. Oh, okay, I have this lag on my thing. Oh yeah,
so, but
yeah, yeah.
that was it plays in really nicely to the. Sorry for jumping so much here, guys. Was on the 15-minute charts. That whole concept that always seems to pan out pretty reliably of the volume cutout. And we call it sometimes like stair stepping. So let's wait for this to calculate. We had the lower highs, which is one form of stair stepping. But our whole idea was back up here. We said if it breaks this, there's going to be a move like that because there's a volume cutout. And that's what we did so far. So nice
Yeah.
setup.
Two questions that Ed wants to know what's the best platform for option strategies. We do our option trades directly in Interactive Brokers with their new IBKR platform. It's in beta, but it's quite nice for option strategies. That's our broker, so that's the easiest to us. But I know many people use Tasty Trades for options. They must have a lot of good pricing there and a ton of built-in strategies or Thinkorswim. So I think these are probably the three best candidates. I know TradingView starts to have some support for options also, but that's still in the infancy. So that's probably taking a couple of years for this to be rolled out fully. And more said, sadly, Thinkorswim has nothing to offer except a basic platform. Well, it is one of the classic ones. It's dated now a little bit, but they have a ton of users, so it's still very popular. And Jeff Softness, when he created it, he made a fortune on this one. He sold it to TD Ameritrade, and then TD Ameritrade sold to Schwab afterwards. But yeah, I mean, it's a classic platform. But I agree, it's dated and it's hard to program for Thinkorswim. But our Liquidity IQ and MA Rush indicators, they work great there. So we have many users using these two indicators on Thinkorswim. So they work just as very similar to the ones on TradingView, for example.
So
All
gold
right.
here on the 30-minute, it flew up even further, all the way to 180. And if you were still long, which we aren't,
I can't believe we exited this trade.
yeah, yeah, too bad. But we said, hey, if you're still long, when we exited, we said if you're still long, don't exit yet. We're just exiting to try and make sure we round off the trades for the end of the session. But the next big thing to watch is how is it going to act at 80, 31.80. So we just hit 31.80, and now we're seeing a first little initial pullback here because there were sellers here. And if it clears this, probably going to be up here in no time. Maybe we'll see a liquidity capture up here.
I think gold is going to be the big winner of today, but it's good we exited. It's good to ring the register. I'm a modest guy, but if you have the patience, I think gold is gonna test these all-time highs. My view. All right. A couple of other questions that came in. Ed wants to know. I don't hear much about Metastock. Is it difficult to use? No, it's not. It's actually great for scanning. I mean, it's a really powerful scanner, Metastock. The problem is that it has some limitations in terms of indicator programming. So some of our indicators like Liquidity IQ, at least not yet, they're not available there yet. So that's why we don't use it that much. But for scanning in general, it's super powerful that you can scan literally through tens of thousands of symbols in a very quick time. So yeah, it's a good platform. Jeffrey said, can you look at VXX? What's
Yeah,
VXX? Is it like a triple VIX or something?
sure thing. So here I'm really eyeing this Russell here. That could end up being a nice short with a tight
Yeah,
target stop. But VXX. Okay,
I
gold.
agree with the
Boom.
Russell.
We
What's
exited
gold?
We would have had 2.5 times as many profits.
So sad. I
Shame.
knew it.
Shame. VXX, is it this one probably? The VIX short-term futures ETN or the index CFD? Probably this one because it's on CBOE.
Yeah, probably.
I
I
don't
don't
even
even know
know.
what
What does
that is.
this
Yeah.
represent? Let me search that up for myself. It is an exchange traded note, tracks the performance of the S&P 500 short-term futures index, providing investors with exposure to equity market volatility.
All right.
Okay, so does it drop on upwards volatility and then rise on downwards volatility? That would seem reasonable. This is yesterday when the markets flew up, it dropped down, and then today when they're going down, it's going up. Maybe it's not that simple.
Inverted to SPY. It says it rises on tariffs. Okay, it's like I can invert to the okay. Yeah, but once again, we are technicians, so let's see what we can see from a technical point of view here.
Yeah, this is a 30-minute chart. Okay, and liquidity IQ is on the 2 hour. So back when the tariff plummet began, it gapped up super quick. Liquidity captured at this resistance, usually a sign there's going to be a little bit of a reversal. It reversed down, then it broke out. Crazy moves. Finally, it made a zone break retrace yesterday. And after that,
Yeah,
once the tariff stuff came out, plummeted down. Now today it's up, and one thing I noticed, like it's really far away on at least on the 30-minute from any reasonable levels. But one thing I would see here is on volume IQ. If we're not near a level, the next thing I look at is what's happening with volume IQ. Of course, MA Rush is bullish on this, but on volume IQ, there's a huge, neighborhood of volume right here, and like a lot of volume. If we took all of this and added it up, it's probably going to be similar to like 3 or 4 of these levels down here. So it is significant. A lot of trading volume here, and we're above that now. We're getting into a tier one zone. And usually when you enter these low volume nodes, you expect price to fly up through them. So a lot of buyers
so
here
from
too.
that,
Yeah,
yeah,
go ahead. I would
I
expect us
was
to
saying,
fly here and set and target here.
yeah. And then if you think this a little bit further, if Jeffrey is right, this is the invert SPY. If we fly up there, this will then drop the index futures in the or short idea on ES or what was MNQ is I think not so far-fetched. Which one did you call it for the short
The
again,
short,
Nicholas?
it was a short on Russell, and the short
Oh, the
entry
Russell.
was, see,
Yeah.
it's playing out so far actually, coming down.
That could be something still to consider. If you see a bit of a retracement, that's perhaps something for the after hours to reshort or to short this one with a nice risk reward management. Put your stop just above that tier two zone, and then let's see how if this pans out. So I like this one actually, Nicholas, for a short.
Yeah, me too. I really like it. And one thing I would do, so oftentimes we say for risk management, we speak about pivot highs, but you got to take it into context. So one thing I would see here, if I shorted right here, let's say, I wouldn't place my stop loss at the nearest pivot high, which would probably be like right here. That's too far away. And if we made it all the way back up to there, it's not a bearish sign anymore because there's so much volume here that if we manage to buy our way through it, by the time we hit here, I'm expecting us to start flying up. There's like no resistance at that point on the volume profile. So placing my stop there is a little illogical. It's too far. Instead, I would place my stop where I start to see this big chunk of volume get regained. So we see there's sellers here. Right up here, it's not really sellers anymore. It starts to be pretty even. And this is where the volume starts to drop off. There's not a lot of liquidity that price needs to push through. So I'd actually place my stop on something like this, like right here. Um, this is kind of a little pivot high. And once we break that, I mean, it's kind of blue skies ahead to a certain extent for a while. So that's always something to consider. Don't just
Yeah,
blindly use pivot highs if you have other indications you can use.
great. So yeah.
And
Um, all right, cool. Two remarks before we wrap this one up. First of all, Scott says he's learned a lot. Thanks so much. All right, great, Scott. That's great feedback. Thank you for sharing this. That's exactly what we had in mind. So I'm glad you found this session useful. Perfect. And then Jeffrey said, trade management is so key. And yeah, I could not agree more with this comment. And I have to repeat my story again. I know for those of you who are joining us for the fifth or 10th time, you must be tired of it. But yeah, trade management is so important, especially when to get out of a trade, when to close it. And my classic story is, say, two traders. I'm sorry, I apologize for the repeat. Two traders are meeting in a trading room in the morning, just like we did here, Nicholas and I. And then they decide to trade, let's say, the NQ. Nicholas is going long and Daniel is going short. And at the end of the day, both ended up with profitable trades. How is that possible? And the only answer for this is trade management. They had proper trade management. They were able to benefit uh, that way to make the long trade a winner and also the short trade a winner. So yeah, Jeffrey, great comment. And so I apologize for this repeat
No, I
for
think a
those who
lot of
are
people haven't
joining
heard
us.
that. You haven't said that in a long time. So,
I just said yesterday at the Wealth conference, but
um,
if if you skip that one, maybe this was new to you today.
okay. So
Perfect.
here, all right, gold really flying up. Russell dropping a bit. I'm curious, our idea was that we might break through here and come up to here, and we actually have delayed data here. So I'm curious if anyone doesn't have delayed data, did it do that? Maybe it did or
Oh,
didn't.
but it's not delayed data on the that's just interactive brokers,
Okay,
I
okay,
think.
okay. It's real
If
time
you
on the
go,
chart.
no, it's real time on the chart. That's just what we do because we don't want to buy data for both TradingView and Interactive Brokers. So on Interactive Brokers, we just use the delayed feed, and on TradingView, we use the real time one.
Got it.
Yeah.
Okay, and I'm checking to see any other questions we didn't cover. Jeff said silver is used to make phones, gold as a currency hedge. So it's a good point, and it probably makes sense then why um, when the markets really plummeted the other day or other week, I think on April 2nd or April 3rd, silver went down with them and gold didn't because, if it looks like the economy is collapsing, not as many people are going to be buying shiny new phones. Maybe that's why silver dropped because the expectation less things are going to be produced and sold. So looking at silver, a good thing we decided on gold and not silver. So silver actually had a great move from your call. I shouldn't have been so patient from when we called it. But silver is also, I think, having trouble moving up compared to gold. So gold is flying up, silver is still kind of downtrodden. And with the indexes dropping, that's probably also taking its toll on silver.
Yeah. Did you delete the pending orders on silver with the gun?
Yep, we got
Yeah,
all of
right.
our orders are gone. So no
Perfect.
working orders.
That's always good to check to not have pending orders lying around somewhere when you close out your session because of course these might get filled. All right, perfect. All right, guys. With this, congratulations, Scott, for replicating our gold trade. I hope you're still in it and didn't close it out prematurely, just we did. But I'm kidding. It was a good call. I think most of our calls today, where price will be in the future, worked out quite nicely. So we didn't get all the entries that we wanted, but the main feat of trading is say get the direction right. Then it's of course just also getting your entry right afterwards, but at least in the direction part, we were pretty much spot on throughout the day. Great. Perfect. With this, guys, the recording will be online on YouTube for you to rewatch if you want to in a couple of hours. And lots of thank you, guys. Perfect. The tick noise are based on bookmap algos. Okay. All right, perfect, guys. That's it. Thank you, Niklas, so much for your great charting today and trade execution. And hopefully, we're gonna have another live trading workshop very soon. And by the way, guys, if you are German speaking, I'm going to do something crazy next week. For those of you who are in the German speaking market, I'm going to try something which was never attempted, I believe, in the history of mankind. It's called speed trading. We're going to try it out with a German broker next week with WH Self Invest. And we're going to do 30 minutes of power trading to see how much we can do in those 30 minutes. So if you are German speaking, watch out for the invite for that one with WH Self Invest. And if that works out, we're probably going to bring that concept to the English speaking community as well. It's kind of a trial run to see if this
Awesome.
can be an interesting concept. What do you think about this, Nicholas? Speed
Yeah, it
trading.
sounds exciting. And also, Yeah, well, there's some other updates we're going to have coming that I think not going to reveal them yet, but that are going to play really well into that if we continue with that
Yeah.
fast, shorter time
Perfect.
frame trading.
Yeah, exciting times ahead. So watch out for speed trading next week if you're German speaking. But I will definitely give you guys a recap, good or bad, at our lunch and learn afterwards. See how that panned out. It's an experiment we are trying. All right, with this, guys, have a nice trading day. Stay safe out there. Make sure you are always within your risk tolerance, and then talk to you soon. Bye, guys.
Bye,
Thanks,
everyone.
Nicholas.
Thanks.
Bye.
Thanks,
Great
guys.
session. Bye.